Okay guys, well welcome to So I have a bit of a treat for you today. I have a gentleman who has a lot of experience, almost 20 years experience in the industry. He's worked at Merrill Lynch, he's worked at Credit Suisse, Morgan Stanley. You might have seen him on Bloomberg, you might have seen him on Sky News. He's been on other news channels as well. He's also worked in retail brokers. Now he's the head of research at Pepperstone, Mr. Chris Weston. Good morning to you, sir.
Yeah, 20 years experience, despite my incredibly youthful looks. I've been sort of doing this for a while, both in sort of trading and research, and I've worked in both institutional and also retail, as you rightly point out there. So it's an interesting time to be in the market, and hopefully we can give some insights about how people get the edge, trading CFDs and FX products.
Yeah, sounds good. So, I mean, you've got quite a unique experience because you've been involved in institutions. You've been now involved with the retail side of things. That gives you kind of quite a bit of insight into, how traders operate, how markets operate. You've got quite a broad depth there. Obviously, as head of research, your main job, I guess, day to day is just sifting through trade ideas, and then we'll talk about it at the end how people can perhaps get some trade ideas from you if they like that kind of stuff. But let's just start talking about trade. So you obviously, there's so many markets out there, so many ideas. How do you go about just generating a trade idea? Just talk us through your process, Chris. What's your thought process? Are you using fundamentals, using technicals? How does it go from sort of seed idea to actual, hey, this is what I think how should we operate in the actual real world?
Yeah, I mean, I tend to sort of stick to markets which are actively traded by clients, and that's not just a reflection of me appealing to the masses, but it's actually a reflection of what's the right asset within my framework. And I have a framework, I have a trading process, I have a thought process that I work, and you take the big picture items, and when you get these big sort of ticket items that are going through, these big thematic ideas that are going through, be it something to do with central banks, be it something to do with an election, a political event, and how that could shape the role of monetary policy going forward. You tend to see sort of assets which, these themes really sort of dictating what markets, what instruments are going to work, and what are being used to express those views much more readily. If you go into where I'm saying this right now, you look at the US election, and right at the core of this, using various frameworks, we can work out that one of the main drivers of markets is deeper inflation-adjusted bond yields, real yields, and the US dollar. The US dollar is central to everything at the moment. If you're trading gold, we tend to see a weaker US dollar gold price and weaker real yields. We tend to see gold prices moving up. We tend to see the NASDAQ going up. And just by generally finding out what is right at the epicenter of the thought process of the market, choosing the assets that are moving, we can then work out and deduce what is the sort of the second derivatives of those trades. I think once you've got that framework in place, there's obviously the whole sort of next sort of steps that come along with that. It's not just about entry points. In fact, entry points is a rather small component of that thought process. The next one is what is the flow of money doing? This is why, for me, the technicals and the price action is absolutely fundamental, especially in FX, where you've just got this massive aggregated pool of capital, be it real money, be it leverage funds, all the different major players that are moving capital around for whatever reason. Following the money flow and making sure that money flow fits in with my sort of fundamental view. I think the US dollar is going up for whatever reason, but it's going down on a concerted basis. I'm not going to trade that. I want to wait for the probabilities to align, and that means when my fundamental view is dictating something, and the flow of capital is resonating in the technicals. Obviously, then you've got agreement, and that increases the probability. I think the next step, of course, is so importantly is looking at the volatility in markets, understanding the sort of price moves we've been seeing. Understanding how much risk I'm going to be taking on in a position. You can understand from that perspective how much you sort of look at your position size. When you understand that, you can work out sort of how much I'm risking, how much reward I want to sort of target. And then, of course, there's a whole process when you're in a trade, how you manage that and try and extract the most out of that as well. So there's a big process that we go through. But generally, what we're looking for is big picture stuff. And that sort of resonates with things like gold, US dollar pairs, and the sort of the big headline indices as well. So generally what we're seeing in the framework are the sort of assets that our clients are readily trading anyway.
Yeah, sounds interesting. So you're kind of leveraging on two aspects here. You're leveraging on the big picture money flow, like the engine of the market, so to speak. What's driving things and ideas, and then you're picking whether it is gold that's moving from that, and then do you kind of pick the best technical setup based on the big theme? So say the bigger theme is weakening dollar, for example. You then pick, okay, I'm going to trade either this currency pair because I think that's the best one. Is the next level then a kind of technical aspect after you've got your bigger picture? You drill down and you talked about price action, which is kind of my thing as well, which is great to hear. How do you kind of integrate that into your ideas? You kind of scan majority of things and pick the best charts. What's your kind of process from that point?
Yeah, exactly. I think movement's always a really good one. People are magnetized to movement and range expansion, like flies to lights. That's really what everyone gravitates to. You sort of come in the morning and you look at the flow that's happened, and you generally see massive activity in the pairs that have and the markets that have seen movement. People love movement, and I think movement's always a really clear sense about what's being traded as that big picture thematic. The two are very much joined at the hip. But I think it's important for clients, and this is something that I have myself, is to understand what your objectives are in trading. Obviously, it's to grow the capital in your account is your first and foremost, but how you do that is obviously down to the risk parameters. But I think it's important to understand the strategies that you hold, and the two that I have is the one I've just talked about there, which is sort of big, sort of macro thematic, and looking at the assets you trade, and then having the framework around that. The other one, which we do quite a lot of, is around sort of short-term mean reversion. And you'll see this quite a lot in some of the research that we do. We're looking at levels where the probability of an intraday move may be where we're going to see price action sort of reverse. And the way that I like to do that is using a blend of optionality and also things like pivot points as well, and also maybe Bollinger Bands. But what we're looking for is a sort of combination of implied volatility and realized volatility, and when they marry up together, you generally get that confluence. And you're looking at points in the day where we're going to get a reversal. So this is a different type of strategy that we're going. Well, I think people can run multiple strategies. It really depends on how much time you've got and your own personal circumstance and lifestyle. But for me, the other one is where, as I say, is if you look at options markets, you can look at things like straddles and strangles, and you can actually put a degree of confidence, and actually a statistical degree of confidence, where the market sees a potential move in a specific asset. It could be gold, it could be euro dollar, it could be a currency pair, it could be even an index, for example. And you could say, with a 68.2% level of confidence, or one standard deviation, that we could see the price going out to these levels, we can actually use the options market. And the great thing about the options market, and while Pepperstone don't offer options, this is something that we provide to people through Telegram and through our communications as well. Where the market sees a price moving to a 90% level of confidence. What we do in Pepperstone is in the charting packages we offer is obviously pivot points, which look at a prior's range and then projects a potential move. And generally, when you see those marry up, that can be a really good statistical point of a probability of where a price may look to fade within the day. So we can put a statistical level of confidence the price will do there. Of course, giving levels is one thing, but with any kind of trade idea or suggestion or general piece of advice, it's about how price reacts around these levels. This is, as you as a price action analyst as well, we can go and give levels. It's how price behaves when we get to those levels. So it can continue to keep going, obviously. But if we actually look at that, take it down the time frame into a much lower time frame, into say 5-minute charts or whatever, and we see price starting to roll over, and the counter trend move coming in, that's when we start to trade that as well. So I think it's important to have a range, if you've got the time on your hands, to have a range of situations. But we're also, the other strategy we're looking at is, as I say, looking at levels where we could potentially get reversals and putting a level of statistical probability around that.